Stage is yours.
Thank you. Thank you. So let's start off with some introductions. So Kim Baroudy is a senior partner with McKinsey & Company and the leader of McKinsey's technology, media and telecom practice and the former managing partner for McKinsey in Denmark. He's also the co-creator of the Fuel by McKinsey proposition in Europe, which today helps startups and investors accelerate growth through consulting services, capability building and connections tailored to startup timelines and the need to scale fast. Kim serves on many leading technology companies and investors globally with extensive experience in large-scale strategic and digital transformations. In addition, he leads McKinsey's research on the European technology landscape. Privately, Kim lives here in Denmark and is a passionate business angel. Please welcome Kim. We also have with us Jeppe Rindom, who you might know. He's the CEO and co-founder of Pleo, a company spending platform. Since launching Pleo in 2015, Jeppe has grown the team to over 370 people globally and raised more than $220 million in venture capital. Today, over 17,000 companies use Pleo. When not building Pleo, Jeppe is an angel investor in startups focused on business software and fintech. Along this, Jeppe is an advisor to private equity funds and portfolio companies. Jeppe started his career in McKinsey and has, among many other positions, been CFO for Tradeshift both in Denmark and San Francisco. So please welcome Jeppe. And before we get to the fireside chat, Kim has a presentation to show us.
Do I have a clicker, by the way? Maybe not. So what he actually forgot to mention is that Jeppe and I, we actually know each other for 20 years. So we wrote our thesis together, we have lived together, we started in McKinsey together. But it'll be good today. We'll make fun of each other. Just before we get into the fireside chat, I felt there's an obligation as a McKinsey guy to come with a bit of facts. So I have a few charts where I'll just give us, sort of say, a platform to discuss how the tech actually is doing in Europe. And if we start here, there's a lot of anecdotes, there's a lot of, I would say, emotions around this debate. So are we doing well in Europe, or in Nordics and Denmark specifically, of course? Or are we not? I'll give you a bit of the run through and I'll do it very, very fast paced. So apologies for that. You can take pictures or whatever you feel like, but we want to get to the discussion. But basically you see here Europe, and I took the liberty of putting in UK to Europe for a second. But EU and UK compared to the US. And as you basically see, roughly the same size of economies, roughly the same population. We can debate, of course, up and down here, but also the same amount of software developers. So there's nothing structurally wrong with Europe. That's the good news. By the way, a software developer is probably roughly half the price of San Francisco in Europe. So the less exciting news, this is probably difficult to see, but this is on the left-hand side, you see top 20 companies 10 years ago. On the right-hand side, top 20 companies today. Tech is basically taking over the world. Unfortunately, Europe not part of that story. So you won't find a lot of European tech companies on the right-hand side here. And if you look at the top 10 companies or top 8 or whatever the metric is, basically it's populated with US-based tech companies and to some extent Chinese. The good news is that in terms of startups, Europe actually produces 36%, as you can see here, of all the startups in the world. So there's nothing wrong with the level of innovation or entrepreneurial muscle in Europe. The real challenge we have is to scale them. So if we exclude Jeppe for a second, but 14% of unicorns are in Europe. And there's all kinds of good and bad reasons for why we're not scaling, but that's basically the root cause of the problem. We did a long analysis, and this is just one version of the data, but basically looking through the funnel. So basically it's from seed capital to A, B, C, D, and E. And what we found, US versus Europe, is that companies don't fail more often in Europe. Contrary. So we actually produce good companies. The problem is we also don't succeed more than the US. So basically, we produce great ideas, a lot of startups. We don't scale them, and unfortunately, we don't advance in the funnel in terms of capital. So we produce good companies, not great companies, on the back end of great ideas and entrepreneurs, if you ask me. Here are the 5 reasons we think for that. I'm sure you are familiar with all of them. We'll debate them in a second. But it's basically the structure, culture, languages, fiscal frameworks, tax regimes, all the good stuff around that. Talent, access. I know Jeppe is a big believer in that. We have the capital and we have infrastructure. Happy to debate it in a second. I'll finish in a second on this presentation. But this is basically just to sober up the room. So we looked at the top 1,000 tech companies in the last 20 years in Europe. And this is the overview that you found. So we like to praise the Nordics for being a hub. Reality is, if you look over 20 years, it's not. So Sweden gets above fair share of leaders. Denmark does not, just to give you an example. So we represent roughly 2 to 3% of the sort of say European economy. We also represent 2 to 3% of the leaders of the tech landscape. The good news is we're accelerating. So I'm much more excited today than I was 5 years ago. But reality is this is the picture for a 20-year horizon. We then look to the ones that actually do scale. And everybody thinks they're unique, and they are. Everybody has a unique idea. They have a unique scaling opportunity. They have a unique many things. We thought it would be interesting to see, are there some commonalities or archetypes we can learn from if you are a startup today? So being an investor or an actual entrepreneur. And we found 4 plays. I'm not going to go through them in detail, but they are actually pretty insightful and exciting. You can, by the way, find the report on our website. But it's there's basically the network play and the scale play, which is size and local network. We have product play and deep tech. And reality is that if you find actually in Denmark, 95% of our champions are on the right-hand side of this, so product or deep tech. Deep tech is largely biotech, by the way, in our part of the world. We did a lot of actually clustering analysis statistically to prove that this is actually the case. They actually do look alike. There is a common recipe for these companies as they scale. So we looked at a number of dimensions. We did some analysis and we found out, okay, what is actually important for each of these companies and what can they use to do that? So even though you feel you are unique as an investor or as a startup, we actually think you can learn from each other. And there's a little bit of a playbook that has been developed. It's about, should you do M&A? Probably not. If you're in deep tech, then it's all about hiring from the top schools, R&D talent and so forth. If you are the left-hand side, it's all about scale. So big time M&A, quickly, get commercial structures in place, probably have 50% of your organization being commercially oriented, where if you're on the right-hand side of the chart from before, product play or deep tech, you need more R&D functions, more product people, and so forth. I'll skip this. Unicorns take on average, well, actually you can see here how it's split in each of them. So 80% of unicorns actually get to there before 10 years. That's an interesting fact in itself, I think. Of course, if you have a network play, more than half of them do it within 5 years. They do a lot of M&A, they do a lot of other things, but it's actually pretty interesting. Of course, Jeppe was fast out of the box here, but so he's the exception again to the rule. But this is the average for all champions, as we call them, so the top 10,000 companies in Europe. And the final chart I have is this one, which that's the one that gets the most attention after our report, especially from investors, is how much funding does it actually take to become a unicorn? But also how much revenue, on average, have you delivered when you become a unicorn? And you see here on the left-hand side, it takes anywhere between, let's say, 80 to 220 million to become a unicorn. The implication of that is that don't be afraid of raising capital, because you are just following track record of all the leaders in the region we have. On the right-hand side, you also see that, of course, there's different levels of maturity in terms of revenue. Deep tech basically has no revenue when they become unicorns. It's all an idea, R&D, and so forth. If you go to the scale play, they really need to demonstrate real revenue, and they have a lot of commercial, sort of say, muscle behind all of that. Happy to debate all the numbers when we get into the questions, but this was just to lay the foundation, you can say, for some facts on how we're actually doing in Europe. So I'll shut up now.
Thanks, Kim.
Yeah, thanks a lot. So Kim, in the first place, why is it interesting for you to look at the European tech scene?
So why is it important? So first of all, I actually think this is where the future wealth of our societies is generated. So we all know we're standing on the shoulders of giants, like we all know the ones we have in this part of the world, but there's actually a lot of them out there. If we don't produce the future leaders, and they can be regional or global, we can debate what is best. I know there's a lot against the global champions, but reality is for employment, for GDP growth, and hence also welfare of societies, we have to scale these companies. And I get worried, and that's actually why we started all of this research a few years ago, is I get worried when we look at the league tables in Europe or even globally, right? So if we look at the top 100 companies globally, we've only added one, some would argue two, in the last 50 years. And at the same time, the US and China has added, they also had a lot, but they added 50. So we have one, they have 50. And so if we want to have employment and if we want to have welfare, we have to scale this. And then I think there's another, which is more a purpose-driven logic, which is that most of these companies, of course a lot of exceptions, are solving a problem of the world. And yes, it sounds very philosophical or high-nosed, but the reality is that we have to take part of that, right? Otherwise it becomes the culture and the DNA, and I would say with the mindset of the West Coast US or the Chinese. And I think Europe has something to offer in that space. And I also think a lot of entrepreneurs are much more sustainability focused and values driven and all of that. And if we let the other guys win, reality is it's their agenda that is driving that. Sorry, that was a long and philosophical answer.
No, I very much agree. I think most of us do. So very interesting presentation. And looking at one of the slides, to look at these top 1,000 European startups that you have investigated, 45% are in the product play, on the right-hand side. How do you think that is? Why is that?
So the 4 plays we derived was actually, it was a little bit of a surprise to us. Of course, it's hypothesis-based, and we found that, but I think the product play is so popular. Also in the US, by the way. The similar number for US is 50. Okay. So basically half of startups in the US and Europe is roughly in the product play. I would argue you also, Jeppe. And this is not to, but I think reality is it's easier to start there. Because you have an idea, you have a product or a service, and you're solving a problem for a customer. So it's not overly R&D focused. Of course, you need to develop the product and an AI machine or whatever it is that you're delivering. But this is most of these are, the SaaS companies, the B2B SaaS companies, it's the fintechs, right? And there's a bit of other stuff as well, but that's majority of them. And there you actually have a pretty easy platform to scale from. And then when you have scaled and you're making money and you've proven yourself, you can expand the scope and the breadth of the offering. Mm-hmm. So I think there's a lot of excitement around that from entrepreneurs and investors because it's easy, so to say. The challenge is to really scale them largely, right? So they become very valuable when they're doing like Jeppe and others where they expand the scope. But if you stay with one service to one segment, to one channel, you will never become a global champion, right? So you have, on average, more of the global champions are on the left-hand side because it is about scale. Mm-hmm. And that's the real winners of employment and GDP and profits and market cap.
Maybe just to double click a little bit on the product angle, because I think in reality a lot of companies end up in a bucket called product or product led. But I think in my view, what really differentiates the different ones and what makes the most successful ones is those that actually extended into becoming not only product centric and product led, but also extremely customer centric, and also figuring out how to bridge the two. So I think 5 years ago we talked a lot about product market fit and how you would get to that. Whereas today it seems like it's not really enough anymore. You need to figure out how do you get to product market distribution, like customer centricity fit. And I think you need to link those to really end up in the extremely successful bucket of being product centric, in my opinion at least.
I actually agree. I think a lot of the players, and it goes for all of them, are increasingly being, as you say, customer-centric, but they're also saying we're just being relevant for our customers. So they measure themselves on NPS and net retention and the stuff that actually matters to customers ultimately, or at least the leading indicators for that. And then they figure out afterwards almost how they monetize. It's not completely true, but it's the primary thing is actually to be relevant for customers, and then you can do something with that. And of course, the good ones actually combine the two. So I would agree that
it's almost a difference between the product basket and the deep tech basket. It's like, where do you start? You know, do you start with the customer, figuring out what are their needs, and you develop a product for them, and you figure out how you deliver it? Or do you start with the deep technology, and then hopefully it's so exciting that, you know, eventually it's going to fit in somewhere? That's almost how I see the difference.
Yeah.
So the reason why we are lagging behind in Europe compared to China, Asia, and the US, North America, has it got something to do with ambitions of the European companies, or what do you think, Jeppe?
I think it's kind of a difficult question to ask, and I also think we need to realize that we are on a journey here. I think there's leakage, by the way. You know, I think we have phenomenal entrepreneurs in Europe, even in Denmark, but you know, we've seen huge leakage that those entrepreneurs tend to go to the US, and I think that's a massive problem. And I think the reason for that are, I mean, there used to be many reasons. I think there used to be the access to a phenomenally big market in the US, but it was also access to capital, it was access to talent and partners and stuff like that. I think some of those latter things are actually less relevant today. I think access to capital, completely available everywhere. Access to talent, not fully available, but I think the remoteness of this world makes it a lot easier to operate in different places. I think what really stands still is that the US is a phenomenal market. It's a phenomenal first market to enter. If you nail it, if you have product market fit, you really tap into something big. And it's accessible for Europeans with language and all of that kind of stuff. So I think leakage has been a problem, and it's certainly been a problem in Denmark. I think also culturally, there's been a difference. I don't know, in Denmark, you have the janteloven, and you have the, it sounds horrible when I try to translate this, you know, it's better to have one bird in your hand than 10 on the roof kind of thing, but like really being very, very humble and very safe in how you live it. And I think it almost comes a little bit in your veins growing up in a welfare system and all that security around you, that I just feel that many European entrepreneurs are safe playing more than they are in the US. And maybe that's changing, I don't know. I think we see examples of that, but I think there is a cultural thing here that we've just seen many Europeans, Danes, that really exit early, to be honest. You know, they sit on a wonderful idea, a wonderful team. They could go to the moon with that, but as soon as they go a few steps down, you know, they're playing it safe. And I think that comes with culture a little bit, and I think that's fundamentally something we need to change if we are to create top 100 winners. That's massive bets, and it comes with, you know, huge risk taking and the long run and the grind and all of that. And you know, it's I unfortunately think we see a lot that play it safe in Europe.
Maybe one just to complement. I actually agree, but I do think. We also went, so typically we look at the structure, which is language and culture and all that. We used to see that as a downside. I actually think it's an upside now, because diversity becomes more important. Diversity of thought and diversity, so basically breaking through that. So I increasingly see that as a, if nothing else, a neutral, but even a positive thing. Then you have obviously the legal framework, the fiscals, the tax regimes, which is much more beneficial on average in the US than the average in Europe. There I think we've come far. Well, this week in Denmark we didn't, but I think we've come far, so that's not the biggest hurdle anymore. Funding, I agree with you that we've come again far. There's still 4x more VC capital in the US than in Europe, right? So, but the honest truth is, if you really have a good idea, you want to scale it, you can probably find funding. So that leaves us, honestly, with the entrepreneur and the organization around and the team around and everything around. So I'm a little bit in the camp that it has to be ambition that is lacking, because if the first one is now positive, the second one we're actually fixing, the third one we fixed, kind of, then there's only the team left and an ambition level. And are we shooting for the moon, as you're saying? Are we exiting quickly? because someone comes and makes a nice offer for you, and then you sell 80%, and you may hang on to a bit, and then it just leaves.
Ambition, but I also think capabilities. I think I think the cocktail is there right now. I think when we went to business school 15 years ago, no one thought about joining a startup or building one. I think that has completely flipped around that mindset. I think the talent is there, like the raw talent is there. They want to go into this industry, but it takes time really to build incredible capabilities. I mean, we don't have many in the Nordics or in Europe that have seen a journey end to end and done it before. I think we are getting there, but it takes 10, 15 years to really get it. And I think that's what we're suffering from in Pleo is really, we can find so much raw talent, so much passion, but it's very hard for us to find people that has been in the industry for 15, 20 years and done 2 journeys before. You can't find that in the Nordics. And I think that those kind of capabilities we still need, and it's going to take a few years before we'll get to that. I think what helps us here is that we don't need them to be local in Denmark anymore. If you're building a company out of Copenhagen, you can kind of like you can tap into a more international scene, or at least European scene, which is helpful. But still, there's something to this.
But isn't it true, Jeppe, then that I know it's one of your vendettas here, right? But it's also we almost need to over-index on mobility and talent. Because we don't have the luxury as you have in the West Coast, where there's like hundreds or even thousands of people that have gone through, a CMO journey or a CEO journey from, small to large. So reality is we have to be able to attract and retain this talent. And if we don't, if the framework is not fit for that, then at the end of the day, we need to hire locally with all the ups and downs of that, of course.
And I think that's really a missed opportunity, because I think what we see over and over again is when we succeed in attracting people to Europe or ideally to Denmark, it just has so many effects, networks effects after that. The amount of competences that are built around those people locally, the amount of companies that later are founded because of that, that's incredible. And example, my co-founder Nico, he founded Pleo with me in Denmark. He's Italian because of that. And there are multiple people coming out of Pleo now founding new companies. So you can always argue from a political perspective, why do you need them in Denmark? If it's not really holding you back, just hire them somewhere else, etc. But as a society, we really need them in Denmark. Actually, more than me as a company. I really don't care where they are, to be honest, because we will find the talent. But as Europeans, as Danes, we indeed need them. Otherwise, we won't, be seeing the next unicorns, the next top 100 companies coming out of this region.
So Jeppe, you engage with a lot of Nordic founders. What are their main challenges? Is it talent or is it something more?
I think we've touched a little bit upon it. I think one is certainly this, allow yourself to think big and allow yourself really to follow it through. I think many founders actually have built something pretty incredible, and they can go very, very far with that. It's more like, keeping the momentum, allowing you to raise the bar over and over and over again. I think that's one. I think talent is another one, that's for sure. I mean, we also discussed it, right? But it is still extremely difficult. And it's not only that we are lacking talent locally, it's also the tools we have to attract them. And that's where I've tried to be very vocal, and Pleo's tried to be vocal. Is like, okay, we can't quick fix that we don't have the talent locally. We can invest into our education systems, etc. It's going to take 10 years, but what we can do is at least make it easier for the companies that want to scale out of Denmark to attract senior people and junior people. And here it's just difficult because a country like Denmark has been built for the I tend to call it the lifelong model. That you're here your entire life. You tap into a welfare system early on in your life. You get a lot, schools, educations. There's a period of time where you contribute a lot, and then when you get old, you get a lot again. That whole lifelong model works for us Danes that tend to stay here for the entirety of our lives. But for those digital nomads that wants to come here, help build companies for 2, 3, 5 years, they tend to be invited into Denmark at the period of time where they only contribute. So they've already paid for an education. They've already they don't have kids. They tend not to pull from the healthcare system. So they're like, why would I ever go to Denmark? It's an extremely expensive country. Why would I go here and just contribute to the welfare system in those 3, 4, 5 years? I think that whole package and that whole way of thinking in a world of talent that is so agile and so willing to move across borders, the lifelong model doesn't work for that. And we need to figure out as Danes how to be a lot more competitive to tap into this more flexible workforce we're seeing out there.
A question to both of you, but starting with you, Kim. So looking at the European tech scene, is there any country or multiple countries who got it right, who are on the right track, who are actually able to compete with the US in that sense? What do you see are the main obstacles that they are facing and trying to solve?
Yeah, but the honest truth is, I actually think most of Europe as a region can compete with the US. I think I showed a lot of facts that says, well, that's not true, but that's in the past, right? It's all data. And if 5 years ago we spent a lot of time, looking in and researching into the super hubs, and 60% kind of in the US are found in the 4 super hubs, and that number is half in Europe and all of that. I kind of lost faith in that, to be completely honest. I think that today's world, COVID has actually accelerated that, but in today's world, it doesn't really matter, right, where you are. As Jeppe is also saying, I guess, you can hire wherever you are. They may be here for 2 days a week and they fly back, or they do dial in, or whatever the setup is. So I'm less focused on these super hubs actually today. And if we look at the fact is that we produce, if not as many, but close to as many startups as the US. That's a fact. We just don't manage to scale it. And so for me, the idea is that, well, of course you have the UK and you have Paris, and then maybe Sweden is overrepresented, but it's a small country, right, in the big scheme of things. And Israel is great, and there's many good hubs, right? But I would refrain myself from that, because I also think that, as part of the discussion we had before, where diversity actually becomes a strength. And diversity is also nation and culture and language and everything around that. So I think we need to play to our regional diversity instead of focusing on, okay, now Sweden is a fintech hub, or Pleo's headquarters, or I don't know where it is, but that for me is becoming less and less relevant actually, because it's a global arena we are playing in, and it's also global money. So US has 4 times more VC than Europe, but reality is, if we really have the idea, you can attract the US, right? It's not that difficult. So for me, funding, everything increasingly becomes global, and I know there's a trend against globalization these days, but I think for startups, it actually plays to a strength, and I think the next 10 years, it will actually play to Europe's strength, because people are also fed up with this profit maximization, West Coast, global, the values that come out of that, including all, by the way, the side effects of having a super hub with real estate prices and schools and all the stuff that comes with that. Europe is not that, and I don't think we'll ever become, and I hope we won't become. But I think we can actually do something better.
Sure. What's your take on that, Jeppe?
I really agree on the diversity perspective. I think, and we are going through that right now, when you're going through the pains, and it is a pain in the beginning of figuring out how to serve 1, 5, 7, 12 different European markets, with all the complexity that sits with that in terms of cultural differences, in terms of language differences, somewhat, regulatory similarities, but still nuances between the countries, etc. And when you've nailed that, I think it's much easier to build a global company. Whilst those in the US, they may have been on a roll for 10 years because the market is incredibly big and they've done phenomenal stuff. But after 10 years, they need to figure out how to transform from a US company to a global company. That's a challenge, and I think. Unfortunately, the data doesn't really support this, but I do think that we will see at least certain sectors where European companies will be more successful, those that have very specific differences between countries and continents. So hoping fintech will be an example because regulatory environments are different. I'm hoping that at least some product-led companies where the delivery model is pretty deep and you need to be close to the customers and understand cultural differences, that you'll see European companies kick off. But the reality is that the data is not really showing it, at least not right now.
But I think actually one data point that supports what you're saying is actually that when we look at the unicorns that are forced global in US versus Europe, we are 5 times more prone to be a global or at least an international player. But for all the obvious reasons I think we can all relate to, right? So we are being, as you were rightfully saying, we are forced into a new fiscal regime, a new regulatory environment, a new cultural setup, new language, new currencies. It's actually not that easy if you're US and you are all of a sudden a $5 or $10 billion company, and then all of a sudden you wake up and figure out that there's actually more to the world than the US dollar or the English language or the American language. That is more tricky. So I think we should play to these strengths, but it also means we have to go global to take advantage of that. Because if you then just stay in your small country with your single currency and your single language and your single everything, you're not taking advantage of the region's strength.
And it becomes incredibly also low practical sometimes. That I spoke with this company the other day, $20 billion company. They are only serving English-speaking languages because their architecture did not support another language. And they said it's probably going to take us 4 to 5 years to launch another language. So it's like if you've not optimized for international from day one, I think you can run into really, really, really big problems.
I think we could talk for another half hour, but we're out of time. Thank you. Thank you for listening. Let's give the 2 guys a round of applause.
Thanks, Christoffer. Thanks, Kim.
Thank you.